Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Welcome back to Asian Session Live Market Analysis on a fresh week, 18 to 22nd February. And I am presenting this webinar on 18th February between 5 and 5:45 GMT. So we will be reviewing the market using the live market code page, and you can follow the expected market moves which are derived using the statistical algorithm, and also I'll explain to you based on the market reading technique what are the possible moves in this particular market in this particular week. Besides, I'll also explain to you the trading strategy which is vital in order to limit the risk and maximize the profit. Now coming to that of the live market code page, you come across the currency pairs. The four majors and two commodity pairs are listed here, and also you come across the symbol of the currency pairs. Then you find the bid and the ask. There is a variation with regard to the levels, that is referred as spread. Then you find the high set so far during the day and the low set during the day. So the day starts from 0000 hours, and the change here refers to that of the current market level when compared with that of the previous day close around 21:30 GMT of the previous day. So currently euro is showing 30 pips lower level when compared to that of the Friday close. That's what it refers to. And USD yen is showing about 54 pips positive net change from that of Friday close. The current level is 54 pips higher than Friday close. And in the case of JBB, 32 pips lower than that of Friday close. And USD CHF, 37 pips higher than that of Friday close. And in the case of Canadian dollar, 9 pips higher than that of Friday close. Australian dollar 21 pips lower than that of Friday close. So what we understand out of that? So the numerator currency is euro. Here in the ratio euro USD, euro is on the upper side or the numerator side. So it is referred as a numerator currency. Similarly, you come across GBP, which is also a numerator currency because GBP comes first. Below that you come across USD and also Australian dollar. AUD comes on the numerator side and USD comes on the denominator side. So they are all called numerator currencies. The numerator currencies are showing negative net change. And USD yen, yen is a denominator, yen is placed in the denominator position, so it is considered as a denominator currency. When it shows positive net change, that means yen is weakening and USD is gaining. So USD yen is showing 49 pips positive net change. That means yen is weakened a little bit from that of Friday close, around 49 pips from that of Friday close, and it is in positive net change. Similarly, USD CHF is in the denominator of the ratio, which is showing 35 pips positive net change, and USD CAD, Canadian dollar, is in the denominator against that of USD, which is in numerator, and that is showing positive net change of 9 pips. So when the numerator currencies are showing negative net change and the denominator currencies are showing positive net change, we understand that in the market they are making USD gaining move. So all the currencies, the majors and the two commodity pairs, are showing USD gaining move. So that means against all pairs, against all currencies, the majors and the two commodity pairs, USD is strengthened nominally around 35 to 49 pips. That is what it refers to. So based on this, the US dollar index is being prepared. Besides, the other factors are also taken into consideration. Other market factors are also incorporated. So here you come across the USD gaining move is seen to start with. Then you come across high and the low. So the high in the case of euro is 1.3359 and the low is 1.3326. Currently market is holding around 1.3331, so it is closer to the low. And in the case of USD yen, the high was 94.22, the low is 93.72. Currently it is in the middle level, 93.98, 94 area. And in the case of GBP, 54.84 and 54.87 are the current levels. 55.09 is the high, 54.74 is the low. So it is 10 pips above that of the low. Then in the case of CHF, it is closer to that of the high, 92.58. In the case of Canadian dollar, it is closer to that of the high, 1.0080. Then Australian dollar, which is closer to that of the low, 10 pips away from that of the low, 1.0275 is the low, 1.0287 is the high. So current level. So now this is what you are able to perceive in the live market quote page. Now how to proceed in understanding my market reading technique. So first of all, I'll explain to you the market reading technique, then come to that of the expected market moves. So market reading is simple, and we try to track the players who are responsible for making the big moves in the market, and so we try to understand what they intend to do by following their methodology of manipulating the market. So they set the initial low and the high around 3:30 GMT. From 2:30 to GMT, they start setting the high, initial high and the initial low in different currency pairs. Then subsequently, in 4 majors and 2 commodity pairs. Then subsequently, they either breach the high and go above, or breach the low and go below. So in that situation, you might come across that they may not continuously rise or continuously drop, and they also make the volatile moves and the fluctuations, the downward move followed by upward move and things like that. There are only 2 possible moves in the market. One is a downward move, another one is an upward move. So everybody wanted to know as a trader whether euro will make an upward move to start with or a downward move. It is a simple expectations, but we try to derive it using various methods, whether it will go up or come down. By using the statistical analysis, what do you find? That when euro comes to 1.3276, it is a strong support, then it is expected to go up. Otherwise, when euro goes to 1.3383, the pivot point, then it is expected to reverse. So we use various statistical techniques and find out whether it is expected to go to the higher level or lower level. At any given level, when euro is around 3334, our statistics will say that when it comes to low, it is a strong support. When it goes higher, it will reach the resistance. Then, which way it is going to make the first move? No clue. There comes the uncertainty to that of the traders. Even though they follow the technicals and the fundamentals, they wanted to know what type of trade they can do, whether they can do a buy and sell trade or a sell and buy trade. So when the market is holding like this, when it is consolidating in the middle level, we should not initiate taking position. And what is another important thing is, geographically, the market is divided into 3 sessions, and that is what the players follow as the Japanese, European and US sessions. I have given the timings. I will also show it when I show the expected market moves for today. So they follow the timings as well as the volume built up in the market. Depending upon that, they handle the majors during the early and the late sessions, and mid sessions they handle the crosses. So this is how they try to make the moves in the market. So today you would have noticed that USD yen was making big move. All other currencies were showing only nominal swings of 25 to 30 pips. So they are trying to handle to start with the yen and yen crosses by holding other currencies. Later on they will come to that of the majors. So this is how, by looking into that of the live market quote page, they are making the USD gaining move. But in the process, yen is active, USD yen is active, other currencies are subdued, so they are trying to handle the yen crosses. Then later on they will come to that of the European crosses during the European session. So we have to understand the sequence at which they manipulate the market. And for that we need to read the type of moves they make in the market, whether they make the stop end or a false move or an extended move or an intentional move. These moves are identified based on the time taken for such moves. Stop and the false moves are done in less than 30 minutes. So that means below that of the initial low, they just go down about 20-30 pips and come above that of the initial low in less than 30 minutes. That they do it during start of the session or the end of the session. That is stop end. And a false move is the one they come up to that of the low without breaching the low and go up quickly and breach the high and stay above, and that is referred as a false move. Or similarly, they go up to that of the high and go to that of the low, breach the low and stay below the low in less than 30 minutes, and that is referred as a false move. Most of the false moves are done before that of the data release and also during that of the gap time. There are exceptions also. Whenever you come across a knee-jerk reactions and things like that, they may make such moves, or any breakout news, they may do that such moves. Then the extended move is they go below that of the low and stay below there for more than 30 minutes. After forming a new low, they don't breach the low for the last 30 minutes and start going up in 2 hours time frame. And similarly on the upside also, they can go above that of the high and just form the new high, stop cutting the new high for 30 minutes and continue to hold near that of the new high for 2 hours without breaching the new high, and come below that of the initial high and start making a downward move. So these are all the moves they try to do it in order to induce the traders to commit wrongly. So after seeing that there are a lot of limitations with regard to using technical analysis, many of the traders or many of the analysts now recommend only the breakout trades. When they break the resistance and go above, you try to take a buy so that there will be a definite profit. And what the players do, they just make further rise of 15-20 pips and just hold and come closer to the level wherein they have taken the buy position and start dropping it after 2 hours. So when they do an extended move, we have to be very careful. Within 2 hours, we have to close that position, a breakout trade. If you fail to do that, then it may happen to be a higher level buy. Similarly, when they go below that of the low and just form the new low 10-15 pips and not breaching that low for 30 minutes to 2 hours, then they may simply reverse and go above that of the initial low and go up. Then we might get struck in a downward breakout trade. So when you are doing a breakout trade, see that you take the lower level sell or the higher level buy whenever you come across the last type of move, namely the intentional move. The intentional move is a slow move. They cut the low and stay below the low for more than 2 hours. Then if you take a sell below that after the drop, then they will make further drop for 2 sessions and the start of the 3rd session. You will be able to really book profit as a definite profit in the breakout trade. Similarly, when they are making an upward intentional move, then if you buy above that of the initial high, when they breach the high and stay above that of the initial high for more than 2 hours, then if you take buy, then you will see a definite profit when they are making an intentional upward move. So this is how we try to understand the trading strategy and also the market reading. Because I am taking this time to explain it, because many of the traders, when the market reading and the derived forecast are given, still they are not very comfortable in understanding how to initiate their trading. So I thought that I can explain it, because many of the people, those who are attending Asian session, find it difficult to attend Tracking the Forex Market Together webinar. I do it during the European and US session. Coming 20th or Wednesday, I'll be giving the Tracking the Forex Market Together webinar. At that time, I'll explain in much more detailed way. So in the market reading around 3:30, we note down the initial lows and the highs, and we try to, here I have noted down, and I am comparing with that of the live market code page. Now you find that Euro formed the new low 1.3326. The initial low was 3332, and they found 3326, and they come above that of the initial low 1.3332. So that means they have made a brief downward stop in the case of Euro, but the high was not breached. In the case of GBP, 1.5474 is the low, 1.5509 is the high, because they had done a lot of hammering and consolidation last week, so they are just holding it to make a big upward move in the case of GBP. It may appear that it is continuously falling because they are discouraging, and when the traders are not liquidating their long position at the lower level, they drop another 100 pips and show 54 level. So traders, because of the margin pressure, will liquidate all their long positions. So over traders have to liquidate and accept the loss, and then subsequently they are expected to make a very big rise in the case of GBP. And yen, 94.15 was the initial low high, and they breached the high and formed 94.22 and come below that of 94.15, a brief upward stop, and after forming a initial high, and then subsequently they have come to 93.98. 93.72 is the low. They are not breached it, so they may just make an attempt to breach the stop or breach the initial low and hit the stops below that around 93.67 or 93.65 and quickly rise it again above 94.22. So this is how the one-sided move with the volatile moves, they do it, and you will never see the earlier lows are reached in the case of USD yen. But still, if you simply buy after the rise, they may test your patience by holding and making a drop. If you calmly hold it, you will be able to see again profit in the case of USD yen. According to me, it is the easiest currency to trade at the current scenario. Only thing is, you should not do over trading. Take one position and simply hold it, even if you trade without a stop, and they may show a drawdown of 100, 150, 200 pips. If you don't bother and calmly hold, they will show you profit. But the best way of trading is, whenever they are making a quick downward move, you try to buy and keep the hedge order still, and if it is hedged, you just watch. If the hedging is making profit, you quickly book profit in the hedging and keep another hedging order to limit the risk, and when they are rising it, book profit on the upside also. So both on the downside as well as on the upside, you will be able to book profit in the case of USD yen. Then coming to that of CHF, 92.22 is the low, 92.58 is that new high, 92.43 was the initial high. So they breached the high and staying above that of the high, and Euro has made a dip of 27 pips, whereas USD CHF has gained about 36 pips. So it is higher. So they intend to make gradual rise in the case of USD CHF. Already they had done the rise in the case of USD CAD and gone above that of the parity. They are holding it, and currently the low is 1.0067, the high is 1.0080. So they are simply consolidating with 12 pips positive net change, and they are expected to make a brief downward stop, and probably about 1.0055 they may show, and then go up above, and when they breach this high 1.0080, they are expected to use some news as the trigger and try to go above 1.01. Slowly you will find as an intentional move of gaining the levels will be seen in the case of USD CHF and Canadian USD CAD, and also in USD yen. Besides, it may appear weak in the case of Euro and GBP. There again, they are expected to gain the levels. And in the case of Australian dollar, they will be making a range-bound move around 1.03 to 1.05 with plus or minus 50-60 pips on the upside or the downside. And that is how they are expected to make a consolidation for a long period. That's what I explained it in the forecast. So in the case of Australian dollar, 1.0279 was the initial low, and they breached it by 4 pips and formed 1.0275, and then subsequently they have gone above that of 1.0279. So they had done a brief downward stop and to make a rise above 1.0303 today. So week beginning false move, they had done it briefly, and also they had done it in the form of stop-ins. So let us see the forecast, what we could expect during this particular week. So today is 18. Swings, nominal swings could be seen during that of the Japanese session, followed by swing and firm up during that of the European session. So the week beginning false move might be limited to that of Japanese session with a brief downward stop in the case of Euro and GBP, and also a brief downward stop in the case of USD and USD CHF. They could do it and then slowly gain the levels and start rising during that of the US session. And tomorrow, 19th February, swing and slide moves could be seen during Japanese session. After the gain, they may make revisit some of the levels and dip during early European session and rise during that of the late European session. And also swings might be seen, subdued moves might be seen during US session. Then Wednesday, 20th, they could make a dip during start of the day and firm up during Japanese session, and little bit of volatile move on the other side to make either way stop-ins, and then start making the slow firming up moves during that of the US session. Then 21st February, they are expected to open high and firm up during Japanese session, followed by that swing and quick rise during that of the European session as well as US session. Then 22nd Friday weekend, they are expected to make a drop during start of the day, then swing and quick rise during European, and also a quick drop and a quick rise moves during the US session. They are expected to do it. So Friday, you know that they will try to make either way stop-ins on the downside during start of the US session and the upside during end of the US session. So then next week you find 25th of February to 28th of February, followed by that 1st of March. So whenever the month end comes, you know that they are expected to make the volatile moves, but this time more upward bias could be seen. And next month, as I explained in my forecast, up to first week they are expected to make, first week of February they are expected to make consistent gain, and then followed by that they are expected to make some volatile moves during February. Then again from end of February they are expected to make the third week and the fourth week they are expected to make the upward move. And in the month of March you will find Euro and GBP and also USD and USD CHF are expected to show much higher level. So you can just use it as a reference material and don't blindly follow, and there will be intraday swings that we cannot avoid. The players have to necessarily do that in order to misguide the traders, and still they will be able to really make an upward move in all four majors and also in the commodity pairs, but range bound in the case of Australian dollar. So today's forecast basically swings during Japanese session and swing and firm up moves during European session and swing and rise moves during US session are expected. Still it is a trending time. Week beginning false move might be limited to the Japanese session, and then you could come across some volatile moves till Wednesday, then followed by that the upward move on the last 2 days of this particular week. In between, during the mid sessions, they are expected to make the contrarian move. Now what you come across is the USD gaining move whenever numerator currencies are showing negative net change and the denominator currencies are showing positive net change. It is a USD gaining move. That's the opposite of it. Suppose Euro, GBP and Australian dollar showing positive net change, and USD Yen, USD CHF and Canadian dollar showing negative net change, that is USD weakening move. These are all the two major moves, the USD gaining or the USD weakening. That is why all the majors are trading against the USD. But when they trade among themselves, then it is referred as cross, Euro GBP cross or GBP CHF cross and things like that. You have to differentiate it. And conventionally, there is a way the currencies are to be classified. But many people use different terminologies, but don't get confused. Ultimately, you need to understand what they refer to. Then also, sometimes they make the majors making the USD gaining move and the commodity pair showing USD weakening move, and that sort of move is referred as a contrarian move. Or similarly, some currencies showing USD weakening move, some currencies showing USD gaining move, and then you may not be able to use the US dollar index effectively. Then you have to understand the players are handling the crosses, nothing to do with the US dollar index. And the players do not have any bias with regard to US dollar or any currencies. They make these currency in fourth decimal levels as tradable instruments, nothing more than that. Nothing related to that of the economic conditions of those respective countries, which we need to understand. But probably the quick moves in the market might give an impression to that, okay, suddenly European economy has collapsed or European economy has gone up and things like that. But how many pips? 200, 300 pips, 400 pips in the decimal point. And if you go to the actual currencies, it might be 1 or 2 cents or 5 cents and things like that with regard to the currencies. And that is the reason that whenever you go for currency conversions with regard to the bank, they don't give the market level. They try to give 100 to 200 pips away from that. When you buy, they will try to give you a higher level. When you go to sell, they will try to give a lower level. So this is nothing but a currency market. You have to differentiate with that of the actual currency conversion and the actual economic conditions of the respective currencies. It might look logical to relate to the country impact on that of the currencies, but the economy of the country does not change second by second for the pip moves in the market. So let me take up the questions which are asked here. Okay, Nambiar. Can you explain hedging with example of candlesticks chart? Your earlier trading system was not clear. Okay. Anyhow, on 20th, I'll be presenting Wednesday, Tracking the Forex Market Together webinar. Probably I request you to attend that. At that time, I'll explain to you with example how the hedging can be used effectively. Okay, desktopment happens only once in a day or it can occur in all 3 sessions. See, they are privileged or they are necessitated to do the stoppant either during that of the start of the session or end of the session. And all 3 days, all 3 sessions, they could do it if the traders are holding the positions without closing it or without a stop. So if the traders are buying, predominant of the traders have taken the buy position in euro and not keeping the stop or keep the stop below that of 1.33, and they get the inside information, okay, nearly 80% of the traders are holding long in euro, then they have to necessarily make one downward stop below that of 1.33 and buy all those stops. That means they buy it at 1.32, 80, 85, all those things, and they sell it to themselves and drop the market. So they don't incur loss by selling at a lower level. They buy it at a lower level, afterwards quickly rise the market above that of the initial low. So this stop and there is no mandatory condition that they have to do it once. Anytime the volume is built up, when the traders are holding predominantly long, they have to make a downward stop. And similarly, when the predominant of the traders are taken the sell positions, near that of the high, then they have to make an upward stop. And that is why most of the days you would have seen, like in the case of USD, and just like that I explained to you, that they made an upward stop and followed by that they made the drop. Similarly, a downward stop and before making an upward move. So they increase the spread between the high and the low slowly and induce the traders to commit wrong trades and then subsequently gain the levels. So that is most important for us. Are they going to gain the levels afterwards or drop the levels afterwards? So in the case of USDN, when they are shown from 94 area to 92, many of the traders thought that okay, the game is over and USDN is overbought and it may not drop or it may not rise, it has to drop technically. But what they have done, quickly gain the levels and holding it. This is what they do it. So ultimately their intention has to be read, not what has happened in the market. What has happened in the market may give a limited information for us, because the market analysis does not differentiate who is overbought and who is oversold conditions. If the players are overbought, the market is not going to drop at all. You have to keep it in mind. If the traders are overbought, definitely the market will make a downward move. Hope you are able to understand. But if you do the statistical analysis based on the levels, we will only in a position to identify whether the market is overbought or oversold. But we fail to identify whether the players are overbought or the traders are overbought. It is a tug between the players and the small traders and also the institutions. So the players are much more smarter because of their volume transactions in the market. 2/3 volume in the market is of the players. So nobody will be able to fight against them. We can only trade along with them and quickly grab the profits as quickly as possible and re-enter into the market when a good opportunity comes. So the players have to necessarily make a quick downward move before making a rise, a quick upward move before making a drop. So I calmly wait whenever they make a very quick move on the upside and they stop cutting the new high and just hold around that of the high for 30 minutes to 2 hours, take a sell. Similarly, whenever they make a quick drop and stop cutting the new low for more than 30 minutes to 2 hours, then take a quick buy. And the move has to be very quick. Then if you take a buy as a contrarian trade, you will be able to see 100% profit and success in your trade. So be an opportunity trader rather than be an addict to trading and simply take a position and pray to God and ask everybody that euro has to go up or euro has to come down. That doesn't help at all, and it will be only a chance trading. You might substantiate your chance by making various type of analysis, but still it is a chance trading. But be an opportunity trader, you will be able to see consistent earning potency in your trading. Then Moses, on our experience, when is the market reversal happens? Normally, the market makes the volatile move during the year-end time, the month-end times, and the big moves happen during that of the year-end times and the new year beginning time. That is over, and now they are expected to make the month-end. And it need not be a reversal move; it can be a volatile move, and they may follow it later on. So that we need to understand, and that can be derived only with the help of the forecast. It is initial low. If the initial low is lower than that of initial low of last day, what does it mean? If you note down the initial lows and the highs of the entire week and track it with it of the next week and things like that, you yourself will be able to say that what they intend to do it. And I will not be able to elaborate on those things because I am giving it those information in my training, so I cannot freely give it here. You have to excuse me for that. Then Moses, kindly explain how you evaluate an 1 hour candle when it close below the Asian during the London session. See, let me explain to you whether it is 15 minutes candle or 1 hour candle. It is nothing but the high lows and the average close level or the last close level. They are being calculated, and with the averaging techniques and that of the extensions are shown there if you use the standard deviations, etc. Ultimately, in a candle, you find in 1 hour time what has happened in the market, and there if you want to go in for the lesser time frame, then the spread of that particular move is seen, and ultimately what the candle explains, what is the high in that particular 30 minutes, what is the low in that 30 minutes, and if you go in for 10 minutes, what is the high and the low during that, and if you go for 5 minutes, what is the high and the low in that where it has closed. So if you try to relate it, it may make some sense or it may not make any sense. That is why many people say that after experience that it does not make any sense, because there is no repeat occurrence of it. When you try to use it as a system, you should be able to prove that it is a repeat occurrence. But when it is not repeat occurrence, there are other possibilities, then you won't be knowing in next 30 minutes what is going to be the possibility. That is why you find when you use any type of candle for that, and finally you find predominant of the analysts have just jumped to that of the 4 hours candle and 30 minutes candle for the short term trading and 4 hours candle for the long term trading. You just listen to the webinars of various analysts using the charts and things like that. You will find they will be using different type of candle formation, and they have gone in for the in-depth study, but the market does not repeat the occurrences because the conditions differ from time to time. The volume differ from time to time. So what has happened yesterday need not be repeated today. That is how our global system is. So yesterday you had taken some type of food. There is no guarantee that today you will be taking the same type of food on the same hours. Can it be possible? And if you systematically take it like that, still you will be able to derive based on the statistics. But there are other influencing factors like an infection. Suddenly you may become tired, and suddenly your biological system might vary, and suddenly you may get fever, and you may not eat the same amount of food at the same time. So when such extraneous factors influence, will you be able to understand the statistics? Will you be able to reflect what you are going to do tomorrow? So we don't use in our day-to-day affair the statistics. We only use the habituation techniques. So we go to the work around 9:30. So we habituate ourselves. Okay, we start around 8:45, 9 our local time, and try to reach the destination. In case if there is a traffic jam and things like that, automatically our mind says that prepone your start time so that you will be able to reach in time. That is how we have a system, biological system, which calibrates and adjusts according to that. But in our statistics, the phase shift is not being incorporated. So I do not want to go into the details of it. It might be more relevant if I talk among that of the statisticians. Then Chowkiat, are you expecting Euro GBP cross reverse to that of that? Yes, Euro GBP cross, they are just making the higher level consolidation with the upward stop and liquidating the long positions what they are accumulated, and they are expected to drop it again. Does it mean that any time the spread high we have a stop end? They can do the stop ends in order to increase the spread between the high and the low, or it can be an extended move, but ultimately you can differentiate the type of move based on the time taken for such moves. That's more important. Then JP Nambia, when you say player's intention, does it technically mean unfilled orders? See, there are various other methods. They use it in the circular trades using all or none orders. That is why you call it as unfilled orders. And they have the various methods of doing it, sir. In Sundaram, you mentioned that hat trick does not happen. See, normally our human sense, suppose I try to commit a mistake using some technique. Then second time I use it, then you perceive it. Okay, third time when I come there, I am going to make the same trick. Then you become cautious. So what do? I use a different technique to cheat you. So hat trick does not happen. How do we find it out? Extended intentional moves for long-term trading. So they follow the hat trick method, not to repeat it for more than 2 times. A similar moves for not more than 2 sessions. So upward move for 1 session, 2 sessions. Their third session, they are either expected to hold the market and liquidate the long position or drop it. Consistently they will not make the rise. That is what most of the people, when they look into that of the chart, when USDN has gone from 82, 83 onwards, they have been asking, there will be definite reversal in the market. And then what the people have done, they had accumulated the sell position and found that they had just made a very quick upward move and start making the drop. So whatever the shot you take, you will not be able to book profit. They may not visit the level, but after a big rise, they may drop little bit. So they know the technique, how to trap the traders, induce them to go in for the short, and it might appear statistically, mathematically correct. And after you commit the positions, it's not that you simply give the forecast that the market is expected to drop or rise, but based on the commitment of the traders. Why based on the commitment of the traders? Only when they are trapped, the players are going to make money. They are not here to show their money power. They are here to earn and maintain their status, the richest in the world. So that is how they wanted to do it. So beyond all statistics, they work. So always they alternate the intentional move with that of the extended move. In between they show the stop ends and false move, extended moves. Also extended stop and moves during trend reversal time. Like the last week of the month and the first week of the month, they make extended stop and a very quick downward move on the same day or within a few hours. They reverse the market of 150 pips or 200 pips. That you should be able to differentiate. Then B-man, it is still a stop and when it breaches the initial low high and reverse back within 30 minutes. Yes, it is stop and. But if it goes back above below parity pretty soon, after which it has become an extended move. Probably tomorrow during day after tomorrow during Tracking the Forex Market Together webinar, I'll explain to you how the extended move can be differentiated from that of the false move and the stop end. Then check it. Do you see GBP reaching 1.58 level? Yes, very soon you will come across that, and people might be laughing when I say it can reach up to 1.65, and later on you will be able to see that after just testing the patience of all the traders and induce them to do the short covering, because whenever they rise, first thing what they want is the short sellers to come and buy it from them. Nobody will buy when they quickly rise the market. Only the short sellers out of fear will come and buy. So they know how the fear can be triggered and earned. So when you see a quick move downward and then the market start to reverse, that move in 30 minutes to 2 hours are supposed to buy order. Yes. Agni? Yes. And if they stop cutting the new low for 30 minutes, just carefully watch how they are holding it and stop cutting it for 30 minutes, and you watch the time in relation to that of the GMT straight away. You don't require any other clock, and you will be able to really see that they reverse. That means what? If they drop and hold, and the traders technically think that the market will drop and sell after the drop. And if they drop, what will happen? Those short sellers will book profit. So they avoid such short sellers to book profit and then quickly rise, suddenly using some trigger, then automatically they come for the short covering. And if they instead, some traders go in for average selling in order to earn back, and that leads to over trading, and when they make further rise, it is a simple technique of trapping. And again use the same technique for the past 18 years. I have been seeing it, but still traders find it extremely difficult to understand, and they are being misguided. That's what I can say, or they are being diverted following certain other things. So invariably, the traders also become fools again and again. Can we euro GBP below 0.80 in the end of this month? Not this month. Probably by next month you will be able to see such big moves on the downside. After month beginning false move, again make an upward stopment, and then they will start making a big downward move in the case of euro GBP. And now you can do a sell and buy trade, range bound trades in the case of euro GBP. Okay, so no more questions. I come to the end of this webinar. So I take this opportunity to thank FX Trade for gathering the people here for the webinars, so that I'll be able to express my views and also my trading system. They are all my personal observations and understanding, and not to hurt anybody, and only to caution the small traders so that they'll be able to understand what is really happening in the market and try to fine-tune their strategy of trading in the market and try to earn small money for their living. So I'll come back again on 20th and give the Tracking the Forex Market Together webinar. It will be twin webinars, 9 GMT and 14 GMT. I will try to review the market and show you how the trading decisions are made, because I can give the forecast, I can give the trading strategy. Ultimately, I have to show the proof of it by taking position and show how exactly it can make money. And I will give only the safe trading techniques during that, because small traders can only take a limited risk and try to take profit in that. So I will give only the safe trading during such market webinar. Then again on 21st I will give the Asian session live market analysis to review the forecast what I have given today, see whether the market has made the moves accordingly, and analyze the market on Thursday and Friday weekend, how exactly the market is expected to make the moves. So thank you one and all. See you on Wednesday. And if you have got any comments and things like that, you can give it in my blog, and I'll be willing to answer to those questions. And the blog is in iknowindices.com/blog and also fxtrade.net. There I'll be presenting the recording of this particular webinar, and I'll not be able to give the updates on a daily basis because I have got certain other works also now, assignments. So if you ask questions, definitely I will answer to those questions. Thank you one and all. See you on Wednesday.